Hey guys, are you feeling like you missed out on the low rates from 2021? With rates now being around 7%, payments are up quite a bit from what they were then. What if I told you there may still be a chance that you could get that 3% interest rate? Hey guys, I'm Christian. I've been in the mortgage industry since 2001 and I've worked every position including being an owner. And in this video, I'm gonna go over how you might still be able to buy a home with a 3% rate. Share this with someone buying or selling that you think could use this info. Now, have you ever heard of someone taking over payments on an auto loan? You may not know that some mortgage programs allow this as well, so that's right. If someone with one of these types of loans got a really low rate in 2021, you might be able to take over payments on that. It's called an assumable loan. Now there are 3 programs that allow the loan to be assumed. They are FHA, USDA, and VA. Now to assume a VA loan, you don't have to be a veteran. Imagine being able to take over payments on a 3% mortgage. Sounds pretty nice, right? It's not all rainbows though. Let's get into some of the upsides and the downsides. Upside number 1, of course, is you could get a much lower rate, and depending on when that loan was taken out, it could be really low, like even in the 2s if it was taken out last year. Now, downside is these are going to require a larger down payment, so you've got to pay the difference between what's owed on the loan and whatever you're paying for the property. So if the loan balance is $400,000 and you're paying $500,000, your down payment would be $100,000. Upside number 2 is these have lower closing costs, so you don't need an appraisal and most of the other costs are lower. The servicer does charge a fee, but it's much lower than what traditional closing costs are. Now, downside number 2 is these can take a really long time, and in some cases it can be several months. Servicers just don't have incentive to get these done like they do on doing a purchase loan. Now, if you're looking to do one of these and you're the seller, there's a couple of things you're gonna wanna check on with your servicer. Now, that's the company that you make the payments to. So number 1 is ask what the requirements are for the loan assumption. Second, ask that if the buyer completes it, are you, the seller, released from liability? Very important there. There's some case if it's not done if it's not done correctly, you may not be released from liability. So we want to make sure that you are. Number 3, ask what their fee is in order to complete an assumption. Each servicer charges a different fee. And then lastly, you'll want to know what the time frame is. You want to make sure that the buyer is going to be okay with however long it takes to complete this. In some cases, we've heard of them taking anywhere from 1 to 3 months. If you're the buyer, it's really important for you to know what down payment and the costs are. You see, with these, nothing can be rolled into the loan since you're going to be taking over the payments by assuming the loan. Next is you'll want to get a home inspection. Now, no inspections are required on these, even an appraisal, but it's a really good idea to make sure you know what you're buying. Next up is make sure you're okay with the time frame. Like I've said before, it could be a few months for these to take place because the servicers just don't have incentive to get them done. Now, this could be a win-win for both buyers and sellers if both sides are patient. The seller could get a little bit more money than what they normally would in today's market, and the buyer could pay less costs and monthly payments. So buyers, if you want to know what closing costs are on a regular sale, check this video out right here. Now, thanks for watching. Please like and subscribe so we can share this with others, and we'll see you on the next one.